Good afternoon, everyone. This is Christy from Van Ahn & Company. It's Tuesday, November 29th. I'm going to go over the market. Got to pull back into these grain markets. Surprisingly, it really was led lower by corn. Corn closing down 11 3/4 cents. Towards the close, though, you did get soybeans to push lower, trading down to 13.5 cents lower on the close. At one point, you were down 16, came back to only 8 cents lower, and then gradually worked your way. But it was really corn that pushed into the close. Could be the fact that people are looking at getting out of that December contract here on first notice being tomorrow, and so you do have those issues there. But overall, you know, what you're seeing is probably a little bit of a managed money roll. They were aggressive buyers of corn and soybeans last week, and that's been really what you've been seeing in this market. Is not a fundamentally driven market. As well, we went another day without a sales announcement from USDA for soybeans. So this was a demand-driven rally here into these soybean markets, even though fundamentals had that demand built into the market. And we've gone well over a week now without an announcement. And so that's going to be getting this market's attention. It probably won't show up on exports or inspections here for a week or so. But really, we need that demand to keep going to support these markets where they're at. We also got USDA to release their outline numbers. So these are just broad forecasts for next year, all the way into like 2022, I believe. So a very long range forecast of what you're going to see as far as acres production wise and so on. What they came with acres was a little bit confusing. Between corn, beans, and wheat compared to this year's planting, there's 5.3 million less acres planted. So I'm not sure where they think that is going to decrease. I don't know if they think that's going to increase in some small grains, some CRP, which you can see in a little bit of it, but definitely not 5.3 million acres worth. I don't know if they're thinking you might see prevent plant, but their acres just aren't quite adding up. But where you saw the biggest decreases was a 4.5 million acre decrease in corn, and that is just by the prices that you see in this market right now. The market knows that if you keep prices where they're at, people are not going to be wanting to plant corn. They put almost a 1 million acre increase in soybeans, so we had record soybean acres this year. They're forecasting it to be larger by at least 1 million next year, and then they decreased about 700,000 acres to the wheat market, which is expected as well. But really what you were expecting this market was to see more bean acres take over versus having that gap of 5.3 million acres missing yet. We'll see how that comes out. Now, this is just an estimate. We're going to get harder numbers at the end of March. But what they did was they also gave us farm average prices, $3.30 for corn. That is similar to where we're trading right now in corn, but you look out to that carry into the market for D17 corn, and you're about 55 cents higher than that price right now. But then you look at the bean market, they put a farm average price for 17-18 for next year of $9.35. That is a bit lower than where we're trading right now. So that's what the market's telling you, is that fundamentals eventually trump what this seasonal rally is going to be. We don't know how long managed money is going to stick around. You could even have a case where they stick around and a problem occurs in South America. But for the most part, everything's looking really good. And if you get a crop out of South America, we're going to be hurt coming in here with a lot of acres here for soybeans there. So that is why we are looking at taking some marketing percentages up here in soybeans. Moving on to the meat markets. You had mixed trade there, not a whole lot going on, waiting for some cash trade to really support it. Pork cutouts were extremely high yesterday, only closing up 78 cents though, so a little bit of a pullback there. Into the outside markets, you had crude a bit lower, $1.50 lower, as you're waiting to see if OPEC is going to decrease production. They're having some meetings over the next couple days. The US Dow was down a little bit, or up a little bit, and the US dollar was down just a little bit, so nothing too much in those outside markets. Looking forward, what we're going to be looking at is export sales here in a couple of days to see if this demand stays strong. It has been strong for the last couple weeks here, and if that stays strong, you should find some support underneath these markets. I do have to close with the disclaimer: trading in futures and options involves risk of loss and may not be suitable for all production. Have a great day.